the AI trade is still in the very early stages, despite all the fears that come out. So it makes sense for people, for Bitcoin to have corrections. And I just want to remind people, Nvidia is up over 1,000% since ChatGPT's launch. During that time period, which is less than 3 years, we're almost at the 3-year anniversary of ChatGPT's launch. You've had 5 corrections of 20% or more in Nvidia before it went back up to all-time highs. Bitcoin's going to be the same thing. So you can take Nvidia, you can take Bitcoin, you can kind of put them together as there. And I think people should start realizing that that is the reality, is that we're in a situation right now where as Nvidia goes, as the AI trade goes, Bitcoin to some degree is going to be part of that as well.
The intersection of artificial intelligence and digital assets is beginning to reshape how investors think about markets. While fears of bubbles and corrections dominate the headlines, the reality is that we are still in the very early innings of what many believe will be the 2 most disruptive technological trends of this era: AI and blockchain technology. History shows that disruption always comes with volatility, but it also delivers generational opportunities for those who can see through the noise. Jordi Visser, president and CIO of Weiss Multi-Strategy Advisors, has been making a clear case. Bitcoin is not only following the same adoption curve as AI leaders like Nvidia, it is becoming directly tied to them. Nvidia's stock, for example, has surged over 1,000% since the launch of ChatGPT less than 3 years ago. Along the way, it has endured at least 5 pullbacks of 20% or more, only to return to new all-time highs. Visser argues that Bitcoin will behave the same way. Corrections are normal, but the larger structural move is up, powered by the same forces driving AI. This view echoes the thesis of other prominent investors like Cathie Wood of ARK Invest, who has repeatedly described Bitcoin as a prime beneficiary of exponential technologies. And the data backs it up. Despite market turbulence, Bitcoin has held strong near key support levels, while institutional flows continue to build beneath the surface. Just as the AI trade broadened into a full market phenomenon, Visser believes Bitcoin will increasingly be recognized as the digital store of value in a world remade by code and computation. And Visser doesn't stop at just price comparisons. He ties Bitcoin's path to broader macro trends, including the Fed's recent policy moves and the state of the U.S. economy. In this video, we'll unpack why he sees higher Bitcoin prices ahead, how AI and blockchain are converging, and what it all means for investors heading into the final months of 2025. Stick around, because his analysis extends far beyond Bitcoin, into Fed policy, US-China relations, and the labor market. Before we dive in, make sure to hit the like button, subscribe to the channel, and turn on notifications so you don't miss any of these in-depth breakdowns.
The economic data is good. I don't think people are worried at this point about a rate cut in October. At this point, we're still above 80%. The rate cut happened. Everyone was positioned for it. All year, we've kind of had these events occur where retail, not the institutional side, because the institutional side is still fairly worried about AI. And there's been enough signs this week for people to be worried. Retail has been dominating the market this year, as we talked about last week with your brother and I. And I think there were signs, which I highlighted in the video last week, that all of the retail favorites, a lot of the meme stocks, crypto, everything had just a really rapid rise leading into the Fed rate cut. And so when you get an event like this, everyone was talking about sell the news. The market really hasn't fallen much. We've just had 3 days of weakness going into today. But I do think retail as a whole was a little euphoric going in. You saw a pullback. I don't think it has much to do with the Fed and getting through that. I think we started this week off with more AI fears from the institutional side. And I think they've kind of triggered the need for retail to look for the next catalyst. So that's all that's really gone on.
Bassett even said it was priced in, 25 bips.
25 was priced in. But I do think people should take one thing into context as we go through this. Corrections are going to happen because the market is being driven by one investment theme. And until we start to see the PMIs broaden out, which I think will happen, as I've said repeatedly over the course of the next year, the S&P 500 is being driven by about 10% of the stocks. They're all related to the supply chain of AI. So whenever the AI theme let's say, runs into profit-taking mode for a period of time. And retail's been all over the AI theme. They've been all over Palantir. They've been all over Nvidia, Micron, all of these names. Once you reach a point where profit-taking is just normal, I think you're going to see the entire space come down because there's really nothing positive for people to hang their hats on outside of AI at this point.
September is normally a down month. October is normally an up month for stocks. Do you see this trend continuing into October this year?
Well, so far this month, I think as of yesterday, even with Bitcoin being down where it was, I think it's still flattish for the month. Mm-hmm. I think stocks are up for the month. So I'm not sure September is going to finish down for the month. But I do think as we get through kind of the shutdown fears, which are now starting to percolate a little bit more, and for people who, we haven't really been together on this, this weekly during a real shutdown, there's got to be at least a 30-40% chance of a 1 week to longer shutdown in the government, just based on how polarized things are. A lot of times this thing gets solved right at the very end, so I wouldn't be surprised. But historically, it just doesn't matter for markets, but the fear factor's there. I think the more important event is happening at the end of October, and this is where I would expect that people are going to start to get more positive. The first thing is we still have the possibility of another Fed rate cut. The economy is fine. We just came out with a GDP of 3.8%, and now the GDP now is above 3.3, and that was before the personal spending numbers came out better than expected today. At the end of the month, Donald Trump will be headed out to the APEC summit. President Xi will be at the APEC summit. I believe that China and the U.S. are headed towards a deal, a structure that will allow them to be working together and not decoupling. I still think people believe decoupling is a possibility, and I think there's a chance here that a deal between China and the U.S. would get rid of hostility fears that are out there and kind of get people to resolve that maybe for the next few years of Donald Trump's presidency, China and the U.S. will coexist, as I've said, in mediation before a divorce that'll happen at some point. But that just means the world can grow and we don't have to worry about kind of tail risks that would come through. I think that would be a trigger point in the next catalyst for the market as we go into the final couple months of the year.
Do you see that would settle a lot of the uncertainty in the market?
I think the uncertainty, as I went through in my weekly video last week, has been coming down. I mean, FactSet did a great job of just highlighting in the earnings calls from companies, which I think is a great way to measure this. The uncertainty for them on things like tariffs, the uncertainty for them on inflation. Those things have been coming down. And it's the rate of change. So we were at incredibly high levels in the second quarter. It's coming down, and they're also making money. For most of the consumer confidence levels, they're still very, very concerned. And I think that has a lot to do with the way the media has portrayed the fact that they're still, oh my God, they're coming. The tariffs, we haven't seen the impact yet. Everyone's going to be in trouble. Inflation's going to go higher. And at the same time, people are worried about their jobs. Mm-hmm. They're worried about their jobs, partly because of the tariffs, but mainly because of AI at this point. I think it's not going to resolve those two fears, but I do think for the marketplace, it will get rid of the fears that are in there from the company level. And every time that we see a second derivative or a rate of change in things like uncertainty, tariffs, inflation, things like that, it comes down. That's the other element that I think people have to start to be, you're always looking for the place where the smarter, sharper pencils on the hedge fund world are worried about. And people are still worried that the inflation data could tick higher. There's a lot of people calling this a policy mistake. My belief is that the labor market is going to remain on the weaker side, that we're going to have this problem that's going to be persistent for the next 12 months, even with PMIs going higher. I think the impact from AI is real, not necessarily in firing, but in this subdued labor market. And if you have a subdued labor market, you really need inflation to tick up dramatically based on what the Fed said. And if we don't see that, I think the mistake people are making is that rate cuts are coming more because of labor, less fears about inflation.
Visser makes it clear that the recent Fed rate cut was not the main story for markets. Instead, he points out that retail investors, fueled by AI enthusiasm and speculative favorites like meme stocks and crypto, were overly euphoric going into the event. The so-called sell the news reaction caused some short-term weakness, but in Visser's view, this was nothing more than a healthy correction. The bigger picture is that markets remain concentrated in a handful of AI-related stocks, and until growth broadens beyond that theme, volatility will continue to come in waves. But Visser is quick to note that catalysts are lining up. from the potential for another Fed rate cut to a possible US-China deal at the APEC summit, to falling uncertainty in corporate earnings, he sees reasons to expect markets to stabilize and turn higher into year-end. With GDP growth still strong, inflation fears moderating, and AI continuing to dominate the investment narrative, the setup looks constructive. And it's within this backdrop that he brings Bitcoin back into focus. Which brings us to the second key part of Visser's analysis, Bitcoin's direct link to the AI trade, and why he sees it as one of the purest expressions of this technological revolution.
Are you bullish on Bitcoin towards the end of the year?
So Bitcoin fits in with this theme, and I want to equate, because I get a lot of outreach from people. So Bitcoin's been kind of stuck here for a period of time. I've said repeatedly that for me, Bitcoin is the purest AI trade, as AI goes through the complete disruption of all businesses. And the only moat that's left at the end of the day is a store of value that is in the digital economy. Gold will continue to have its strength, but at the same point, Bitcoin fits in. So whenever the AI trade reaches a profit-taking mode where retail gets hurt, I think everyone should expect Bitcoin to go down. It's not just Bitcoin, it's Solana, it's Ethereum. There's been a lot of speculation in the Bitcoin miners. I think we just reached a point where, again, we've sold off. The AI trade is still in the very early stages, despite all the fears that come out. So it makes sense for Bitcoin to have corrections. And I just want to remind people, Nvidia is up over 1,000% since ChatGPT's launch. During that time period, which is less than 3 years, we're almost at the 3-year anniversary of ChatGPT's launch. You've had 5 corrections of 20% or more in Nvidia before it went back up to all-time highs. Bitcoin's going to be the same thing. So you can take Nvidia, you can take Bitcoin, you can kind of put them together as there. And I think people should start realizing that is the reality, is that we're in a situation right now where, as Nvidia goes, as the AI trade goes, Bitcoin to some degree is going to be part of that as well. Let me put it this way. If we take the merging between AI and Bitcoin mining, this has been a big year for it. First of all, the whole CoreWeave thing, when it came out, kind of got a little bit of enthusiasm. It was followed up by Circle in terms of the stablecoin side. But I think over the course of the last 6 weeks, we finally got the traditional finance people looking at the relationship between all electricity, all power, and kind of where the Bitcoin miners fit into this and this linkage between this. I do want to say this again and again and again. The world is built on code. If there's one thing that Jensen Huang did say that gets back to your emerging market side, which I think is important into the Bitcoin miner, the whole relationship and how these guys are looking for any capacity they can find. Jensen Huang said, this is the ability for kind of taking companies that had a huge advantage and allowing any person in the world to have the same superpower. And that superpower is to turn an idea into an application that can make money. So any child who can speak the English language and come up with an idea can speak into a phone and have an app built. They can connect Stripe to it and they can start collecting revenue on it if it's a good idea. They have to figure ways to promote it. All of this stuff can now be done because coding has become ubiquitous. And I think that gets important to Bitcoin, Bitcoin miners, the relationship with AI. It's all code. At the end of the day, we're merging the digital economy. And this is the reason why I started to go with, there's the macro world, there's the AI world, which is basically dominating the macro world through GDP, through labor, through everything. And then you've got Bitcoin over here, which is the eventuality. And the eventuality is AI is going to disrupt everything in the traditional finance world slowly, but continuously. Is there anyone who doesn't believe, forget the views on Elon Musk. Is there anyone who believes that a car company like Ford, GM, or any of them can compete with Tesla if their full self-driving works, the scale that he's built, the fact that he already has massive battery production, he's got humanoids behind it. Think about what he's been able to create, and he has his own LLM in terms of XAI. How can a car company compete with that in the event that he makes the inevitable progress? So if you think about an old traditional Ford, which is really the beginning of the Industrial Revolution in many ways, compared to where we are in AI, and take Tesla and view it. And I said this on my most recent video. It is not a car company. It is an AI company. And if people don't see that disruption that happens from Elon Musk and his vision that he put out 20 years ago in terms of what it meant to sell the first car, the Roadster, then turn it into more affordable cars, have those cars be collecting data with the eyeballs or the cameras, get those cameras into the AI thing. He built XAI in 2 years. I just think we're in a world where when people get through it, they realize Bitcoin is a moat where people believe in it as investment. And the more that AI is accelerating, eventually it will cannibalize the entire kind of fiat system, of which the Mag 7 are part of the fiat system.
For Visser, Bitcoin is not just another risk asset. It is the digital moat in a world being rapidly rewritten by AI. As he puts it, every major disruption in history eventually forces investors to seek out durable stores of value. In the industrial age, gold played that role. In the digital economy, Bitcoin increasingly fits that bill. This is why he describes Bitcoin as the purest AI trade, a hedge and beneficiary of the very forces driving the AI boom. The connection goes even deeper. Bitcoin mining is itself at the center of the energy and computational infrastructure needed for AI. Traditional finance is only now beginning to recognize how power markets, data centers, and Bitcoin mining all converge. As Visser emphasizes, the world is built on code, and that code is merging across AI and blockchain. This is not speculation, it's the new foundation of the digital economy. And when you zoom out, the parallels are striking. Tesla, once dismissed as just a car company, is now reshaping entire industries by positioning itself as an AI-first enterprise. Nvidia, once just a chip maker, has become the backbone of the AI economy. In Visser's view, Bitcoin stands on the same path. Every correction is part of the climb toward inevitability, a financial system disrupted by AI, with Bitcoin established as the digital store of value. That's why Jordi Visser remains firm in his conviction that, despite volatility, Bitcoin is set for higher prices as the AI trade accelerates. For informed investors, the key is not to get shaken out by short-term corrections, but to understand the structural link between these two unstoppable forces. And drop a comment with your own thoughts on Visser's AI Bitcoin thesis. Do you agree that Bitcoin is the purest AI trade? Or do you see risks others are overlooking? If you found this breakdown useful, make sure to hit the like button, subscribe to the channel, thanks for watching, and stay tuned for more deep dive analysis.